Hi everybody, we're just getting towards the end of the topic 5 on market equilibrium. This is a really important section, so I want you guys to really focus in on this. This is looking at past papers. Now, just in terms of this, in terms of the learning objectives, in red you can see one of the most important things that we've got to be able to do is apply our understanding, the concepts that we've learned in class in relation to demand, supply, and how changes in those will affect equilibrium price and output. We've got to be able to use data and put that theory into practice, and that's what we're going to do now. In terms of this, just a little reminder that in the exam, the WJC want to challenge you. They want to be able to check your skills. They're going to ask questions about events that cause either demand or supply or both to shift, and then you'll have to find and analyze the new equilibrium. Okay, now in the real world, I think it's fair to say most of you think both demand and supply will be changing all the time. In terms of demand, whether it's income, whether it's the prices of substitutes or complements, interest rates, tax rates, population, advertising, all of these things are changing all the time. In terms of supply, the cost of labour, the cost of energy, the cost of raw materials, new technology, taxes, subsidies, the weather. So in the real world, we expect demand and supply to be changing all the time. It's only through our friend ceteris paribus that allows us to analyze the impact of individual changes. Okay, now what I want you guys to do, use the effective reading technique and identify possible impacts on demand and supply from the scenario given on the bottom of page 42, and to draw in any new curves, but don't go any further. So if you think there's a new demand curve or supply curve or both, draw those. I don't want you to draw in any changes to equilibrium price or output. Just draw the new curves. Okay, when we do that, the two curves will have shifted. The new equilibrium will be where the new demand curve intersects the new supply curve. Okay, so if two curves have shifted, that's what will happen. And the impact on price and quantity traded will then depend on the relative size of each change. Okay, so for example, sometimes if there's an increase in demand, you guys should be beginning to think that would lead to an increase in price, whereas if there's an increase in supply, maybe that will lower price. Okay, so the impacts will depend on the size of each change. Okay, so this is the past paper question. First of all, good technique, read the question, and it asks you to adapt the above diagram to discuss whether the policy changes are likely to increase or reduce the price of cycle helmets. Okay, so just in terms of this, I'm just going to get a laser pointer a second. So in terms of this, what would I be looking at? So read the question, the scenario. The diagram below shows the market for cycle helmets. Okay, so straight away we've got a context there. Underneath the diagram, it says, suppose as a result of an increasing number of serious accidents involving cyclists, firstly, the government has made the wearing of cycle helmets compulsory, and secondly, at the same time, reduced the rate of VAT on cycle helmets. And it asks you to adapt the above diagram to discuss. Think about what that means. It's an evaluative term. There must be evaluation marks here to discuss whether the policy changes are likely to increase or reduce the price of cycle helmets. Okay, I will pause the video and I would like you guys to have a go at that for the next 2 minutes. Okay, your time is up. Okay, and in terms of what you looked at, how many shifts did you identify? What were they? At this point, I would like you to draw in the new equilibrium price and quantity traded. Now, this is where demand is equal to supply and nothing else. Okay, this is important. The new demand curve and the new supply curve. Okay, focus on that, where the new demand curve and supply curve intersect. Okay, no other line should be there. So you should have a P1, Q1 and a P2, Q2, nothing else. Okay, and I want to know what has happened to price. Okay, so I'll ask for some feedback now. And I want to know if it's increased, decreased, or stayed the same. Okay, just very quickly pushing on in terms of the wider reading, what you guys should have focused on really. The first thing was wearing making cycle helmets compulsory, and that would lead to an increase in demand, whereas the reduced rate of VAT, reduced rate, so that will actually lead to a rise in supply, and the connoisseurs will be able to tell me which direction or how the curve shifted, and it should be an outward divergent curve. Okay, let's have a little look okay, at what you guys may have drawn. So some of you will have drawn it like this. Outward shift in demand, outward shift in supply, and you guys have ended up with a lower price. Okay, the price decreases from P1 to P2, and it's because supply has been drawn, the change in supply has been drawn greater than the change in demand. On the other hand, some of you will have drawn this. You will have a situation where actually the price has increased, and it's because the increase in supply, oh, apologies, there's a mistake there, let me just check that, there's a mistake there, the rise in demand is greater than the rise in supply, and that's what you've drawn. Look at the big change in demand. Okay, it's bigger than the change in supply. And then finally, there may be some people who drew something like this, and the price stayed the same at P1, and the reason is because the increase in supply that you drew matched the increase in demand, and as a result there is no change in price. So we go back to our question, who's correct? Some of you drew price increasing, some decreasing, some stayed the same, and if you go back to the question asked you to discuss whether the price increased or decreased, and what we need is that evaluator point, and in this instance that evaluator point is that price could rise or fall or stay the same. Whether it increases or decreases depends on the size of each shift, i.e. whether the increase in demand due to the compulsory wearing of helmets outweighs the increase in supply due to the reduction in the rate of VAT. Okay, I don't want you to worry about this point, but I would like you to highlight it in the skills tips on page 42. Okay, it's the last sentence. We haven't come across the knowledge or the theory on this yet, but there's something else. So there's two potential evaluative points. One, it depends on the size of the shift, and two, it will also depend on the price elasticity of demand and price elasticity of supply. You will understand that when we get to that topic. This is a note for you now so that you remember it in revision.